Why exactly would I want to do a Roth conversion?
Welcome back, TPR Nation, to another amazing episode of the Perfect RIA. I'm your co-host, Micah Shalansky, and with me, as usual, is the legendary Matthew Jarvis. Jarvis, what's going on, bud?
Micah, I'm just having a good time. We're doing more and more guests on the Perfect RA
Yes.
podcast, and I have to confess, I catch myself referring to them as Micah as well. So I'm like, oh, Micah, I mean George. George, tell me more about how this works in your practice. So I'm glad to be back here, Micah, with you recording our standing podcast.
I am very much so. It's interesting, Jarvis. One of the things I noticed this morning. So when I was getting up, I was actually listening to our one of our podcasts that just dropped, and I was listening to it. But I listened to all my podcasts on 2x, and so we don't normally talk fast. Plus, I'm listening to this thing on 2x, so I'm getting in my rhythm in order to speak on podcast mode. But I'm like going super fast, and Kelly's like, "You're going way too fast in this," and so it kicked in there. It says, "You know what? I'm listening to my own podcast on 2x, thinking that's how fast I need to speak." So this fun realization, right? That sometimes we get caught up on our own things and we're not super focused on the end client delivery. And this even happens to me right
Mm-hmm.
here, right? I get caught up in doing something in some routine and I'm focused on how I think it needs to go versus what is the biggest impact that's going to be there for our clients. And this really ties hand in hand, in my opinion, to our conversation today about Roth conversions, because this same thing can happen right there. We can get caught up in our own world about Roth conversions and how it's good, but we fail to communicate that effectively with the client and especially the client's team as to why they should be doing this.
Boy, Micah, that's an interesting point. And so much of this goes back to being intentional. It's funny, Mike, advisors will come up to you and I all the time at conferences wherever we're at, and they'll say, well,
Yeah,
I've implemented surge meetings, but I do this twist, almost like apologetic. Like I have this twist to it. And I'm like, great news. Great news.
perfect.
The whole point of everything we do is being intentional. To your point, Micah, the speed at which you speak needs to be intentional. The way that you're communicating needs to be intentional. Specific to
Yes.
Roth conversions, this isn't about let me recite to the prospect or the client everything I've ever learned about Roth conversions. That's not the point. The point is, as always, help them make an educated and informed decisions. And more often than not, less is more.
That's so much the case, right?
Yeah.
How are we effectively communicating with this with the client at the level in which they need to understand? One of the other things we're thinking about doing for a podcast, is just making it simple. How
Mhm.
often do we overcomplicate things? And Jarvis, you and I are kind of on the same page with this, same one page with this, is that
Ooh.
if you can't explain it on one page, it is too complex, right? My estate planning, how I diagram that. Guess spoiler alert, that's one page, right? My tax planning, it's one page. My buckets of income in retirement is one page. Right now, you could say, "Oh my God, that's 3 pages. It's three different things." Well, sure, if you want to be
Uh,
look at it that way, but for one topic, it's a one-page discussion that we're going to go through because I need to keep it simple. And it's not speaking down to clients in the slightest, right? But we can jump so far into the nuances with things, we
mhm.
lose the ability to effectively communicate what the client needs to do. And that's our job, right? Not only to help determine what the right answer is, but to communicate why the client needs to follow the right answer to get their goals.
Yeah, and Roth conversions are a great example. As I've told this story, I had a client, he managed teams of engineers, and he would keep in his desk drawer a box of Crayola crayons like we all had back in school and sheets of paper. And they would bring in these big reports, and he would say, here's a piece of paper and here's a crayon, draw it out for me. And his point was if you couldn't get it onto a piece of paper with crayon, you were going too deep too soon. There's obviously a case for let's nuance out how far we can go on income before we hit Medicare premium increases.
Sure.
There's a case for that. The first thing, though, is we have to agree that principally it makes sense to do a Roth conversion. Now we can finesse whether it's 23,212 or 24,418. That's missing the point.
So, Jarvis, let's do this. Let's go through a couple of concepts that are there about
Mhm.
Roth conversions, where advisors in our experience kind of screw this up. Now, why are we talking about this? We just did, Steven and I with Retirement Tax Services just did a webinar. We had a bazillion questions on Roth conversion,
Mhm.
which are great, which is why we want to do it here. It's something that I'm going through right now with my clients. We're accelerating a lot of our Roth conversions due to the opportunity we have in the market. It's a
Mhm.
great time to be looking at that. So, it's one thing that we're doing. So let's go through. Let's save our scripts, if you will, to the end. So teaser, you got to stay to
Yes.
the end and give us 5 stars to hear those scripts, right? But so let's save those to the end. But let's go through some other concepts as to where it gets screwed up or why we do this.
Yeah, and again, for our advisors that are not familiar with this, that find themselves sort of on the shallower end of the tax pool, if you will, which is no shame. We were all there at one point.
No, yeah,
And
amen.
you may, by the way, want to stay there. You might say, listen, I'm just going to work with retirement tax services. I'm going to read their newsletters. I'm going to use their value adds. I don't need to become a tax expert myself. In fact, the June RTS newsletter is on Roth conversions. But Michael, let's look, like you said, from not a philosophical level, but why are we doing Roth conversions? Micah, for me, at the end of the day, it's mostly because I know at some point in a client's life, they're going to need a lump sum of money. And I always
Yes.
tell clients, I hope this is for something fun, like buying an RV and traveling the country. It might be for something not fun, like paying for long term care expenses or helping out a family member. In either case, if we take out a lump sum, here I'm in scripts, if we take out a lump sum all at once, you're going to get killed in taxes, right? That's the words I use, killed in taxes. Let's eat that proverbial elephant one bite at a time. So the goal in my mind, Mike, with Roth conversions is kind of twofold. One, let's pay the devil we know. Let's lock in the current tax rate. Let's also create options, right? Financial planning
Yes.
is all about options for down the road.
I really like that. So I do it a little bit differently from my concept of it. I'm on the same page, but again, this is
Mhm.
about being intentional, right?
Yes.
So I can hear a great idea from Jarvis and be like, you know what? It wouldn't sound the same coming out of my mouth as
Mhm.
he's going to say it, but you know what? I'm going to take that intentionality. I'm going to tweak it for what works really well for me. And for me, it's a diversification question.
I
As
love
as
that.
funny as this sounds, right? But we talk about diversification all the time. I have a bucket strategy for diversification, cash income and growth. Why? Because I don't know when the market's going to be up or going to be down. I'm going to hedge my bets to create a retirement income. Same thing with taxes. I don't know when the taxes or what the taxes are going to be in the future, right? I don't. I wish I had that crystal ball. But because I don't, I want to hedge my bets and I want to create some diversification to give our clients better options. So philosophically, this is why I'm doing this. And now this has worked very, very well for me in the past for things that I did not
Mhm.
anticipate coming up in a client's life, right? We had a client, and it's maybe Jarvis in your point where you say there's going to be times in life where you need a big source of income
Mhm.
or a lump sum distribution to come out. Well, it could also be the case that the client sells something. Maybe they sell a second property. Maybe they sell
Yeah.
a business. We had a client sell a business, and when I'm sorry, he sold a real estate property. When he sold a real estate property, we got it almost out 100% tax free because we had money in a Roth IRA. We were able to play the tax bracket game, drop their income down there, and get a lot of money out tax free from that sell of that capital asset because we had diversification. Now, when we started these Roth conversions years in advance, we had not thought that this was going
Mhm.
to be the opportunity that was there. So, again, I like this philosophical concept of I want diversification. I want many different things out there that I can play levers that I can play with to help control my clients' taxes when I need it.
Now, Mike, I want to take a step back again for our less tax savvy advisors listening. And I don't mean that with any disrespect, right? We all have these different areas of expertise. I think taxes should be a foundation. But for those that are less tax savvy, this does not need to be elaborate planning where you say, boy, I've got this
No.
multi-million-dollar transaction coming in year 7. This can be as simple as Mr. and Mrs. Client, when you reach age 72, your required distribution is probably going to be about $20,000 a year. Let's just start converting half of that amount each year right now. So it does not have to be super elaborate. It does not have to be down to the penny. But Micah, to your point on diversification, I think it's borderline negligent if you're not talking about Roth conversions and seriously considering them every year with every client, especially clients over 59 and a half.
Yeah, absolutely. This is something that's a conversation that you need to bring up. Now, when Jarvis said that, keep in mind what he said. It's negligent not to discuss it. He doesn't say
Yes,
not to
yes.
do it, right? This is totally different. But these are things we need to be approaching with the client. And this is a dishwasher rule that's right here.
Mhm,
I want to get credit for the work that I'm doing, even for my clients that it makes zero sense for them to do a Roth conversion. And I have
mhm,
several right now,
mhm,
even though the market's down. I'm not going to do a Roth conversion. Why? Because they're retiring at the end of this year. We have a crap ton of non qualified money, and so I'm going to use that money to live on. Their tax bracket's going to be virtually zero. I'm going to do several $100,000 of Roth conversions, right? It makes zero sense to do it today for them.
mhm.
I am still going to have that conversation because I want to get credit for the work I'm doing. They're still going to have the conversation that says, hey, great news. We reviewed the Roth conversion. It doesn't make sense for you this year. We're still on track to do it this year. And here's how it's going to benefit you. Really, really important to say. I always use the term Roth conversion because that's what they hear, right? That's the
Yes,
technical terms.
yes.
But I'm going to quickly tie it to why does it benefit them?
Mike, and that script that you went through quickly, that's really all it needs to be. It doesn't need to be, here's the 10-page report from the Monte Carlo generator that shows why it's not Mr. and Mrs. Client. We reviewed Roth conversions, and because of these 3 goals, it doesn't make sense this year. Or alternatively, because of these 3 goals that you have, it does make sense to do. So yeah, I'm having that discussion with every client every year, even my clients who you mentioned someone in a peak income year, doesn't make sense. I've got client with a lot of non-qualified money. All of their IRAs 100% are going to charity. Doesn't make sense to do Roth conversions.
Yeah.
The charity is not going to pay taxes on it. Cool. But every year I say, Mr. and Mrs. Klein, as you recall, all of your IRA accounts are going to these charitable organizations, which congratulations, that's really going to make a difference in the world. As such, there's no need for us to do Roth conversions. So that's all it is. Just one line, two
Perfect.
lines, once a year. It's coming up every time.
Now, you might be thinking in your mind that says this gets repetitive. Don't clients get annoyed about this? You're bringing this Roth conversion conversation up all the time. In my experience, no, they've never been annoyed with it. It's a 2-second line that we're putting out there that clients understand and that we're moving on. They love, Jarvis, I'd love to know if you have a different experience, but in my experience, they love to know that we are on top of it. They love to know that we're constantly looking at this, even though if it's a conversation we have 17 times. Beneficiaries, even though I bring up beneficiaries every 2 years with clients, they love the fact that I'm
Mhm.
going through beneficiaries with them.
Micah, this could be a variation of the imposter syndrome. There's probably one of our listeners will tell me what this is actually called. But one of the things we run into is we think, great, I've talked with 50 clients in a row about Roth conversions. Therefore, this 51st client, they've heard it 51 times. Nope, it's still the first time for them.
Yes.
And by the way, especially with Roth conversions, it's a common sort of throwaway thing in financial pornography, financial literature, excuse me. They're like, hey, you should be thinking about Roth conversions. And so it's easy for the client to forget, oh, we did talk about that. The other place, Micah, is any prospect that meets with me. One of the great questions: when your advisor looked at your tax return, what did they say about your Roth conversion strategy? Matthew, they didn't look at my tax return, and I don't know anything about a Roth conversion strategy. Okay, okay. Well, that's probably something we'll want to look at if that's okay with you. So, at a minimum, you want to hedge in case they run into me.
Right. Yeah, yeah, amen. I say it all the time. Yes, I will throw you under the bus in a heartbeat if you never pulled the client's tax return. And there's a very high probability the clients are going to end up working with us because this is, and not just because we're looking at taxes, because the value that tax planning gives, right? This is something we have to do time and time again. All right. So we talked about the philosophical kind of stuff
Yeah.
in there a little bit as to why to do Roth conversions. Jarvis, let's talk a little bit more about how we're going to explain this in meetings. Now, you already said it at the beginning, just to
Yep.
reiterate what you said, is this is not something that we need a 97-page plan for. I'm
Mhm.
sure I'm going to get some YouTube comment that disagrees with this, but this is something that we need a general plan for. And
Mhm.
my conversation with clients is going to be very broad, is saying, hey, looking at your current tax bracket, looking at where you're going to be in the future, I think we should do between X and Y as a Roth conversion. Is that okay with you? And I give them a range,
Mhm.
right? This is what I need to do. I don't say we need to do $25,692.12. I say, great news. We need to do between $20,000 and $30,000 of a Roth conversion this year. Is that going to be okay with you? And then here's my plan to pay the taxes. Those are two
Yes.
parts to it. The first part is always, this is the range in which I'd like to do a Roth conversion for. The second part, after they agree to that, I immediately jump to, how are we paying for this? My general answer, Jarvis, I'd love to know if you have a different way of approaching this with clients. My general answer is, Mr. and Mrs. Client, if your investments generated a tax bill, your investments need to pay that tax bill. It doesn't need to
I
come out of
like that
pocket.
line. Yeah.
So this is how we have a plan to pay for it. And so now this gives me a lot of grace with clients. Let's say that I mistakenly had a large capital gains for a client this year and I failed to make an estimated tax payment or failed to effectively communicate that with a client. Let's say that happened. Well, great news. I've already taught my clients that if your investments generate taxes, your investments get to pay the bills. So it's already building a lot of goodwill for me, and it gives me permission that they're not going to be hit out of cash flow in
Mhm.
order to pay for this.
Mike, I think a couple other big takeaways from those really simple, hey, if your investments generate a tax bill, your investments pay the taxes. This is something that the client can remember when their adult child asks about it, when
Yes.
their spouse asks about it, or
Great point.
when their tax preparer starts backing the bus. And really, the bus isn't even the right analogy, backing the 18 wheeler over the
Semi
top of
truck.
you. And as each axle goes over the top of your head, and they're saying, your advisor is this piece of junk and you owe all this money in taxes, the client remembers, great news. My advisor told me, Micah told me that if my investments cause a tax bill, my investments will pay the tax bill. I'm not worried about it. And then, of course, Micah, the second step, which you talk about all the time, is not only do we have that philosophy, that money is literally set aside in
Yes.
an account so that the client, and we're reminding them ahead of time, hey, before you meet with your CPA, remember we did this Roth conversion. We're going to need to pay $10,000 in taxes today, so we don't pay 20,000 on some future date. And that 10,000, as you can see, Mr. and Mrs. Client, is sitting right here in this account.
It's such a brilliant idea, right? Just to have that effectively communicated with the client to let them know where their taxes are going to be. And now that let's get into tax tolerance and remind me, I want to jump back into tax buckets because this is
Please.
really big in setting the stage. But there's something I call our tax tolerance, right? There's a
Mm,
risk tolerance, which is a bunch of
mhm.
crap.
Yeah.
But there is something that's called a tax tolerance that I have with my clients. Where do they stand at the end of the year? I have some clients that no matter what want to get a refund. They
Mhm.
cannot stand the fear of owing the IRS money.
Micah,
Found it or
would you in
please.
your experience say that's the bulk of clients? In my experience, the
Yes.
bulk of clients,
Yes.
even though they sort of
Yes.
understand that that's a
Yep.
interest-free loan to the IRS, they would much rather get money back within a reasonable spectrum.
Vast majority, right? If we can keep it, somewhere between, 800 and 1,500 bucks
Mhm.
on a refund, clients are elated at the end of the year. We start going north of 1,000, 1,500 bucks. They generally want to start doing some different things with holding because it's
Yeah.
it's too much money. That's my experience, right? Know your own clients, and that's the
Uh-huh.
that's the point of this. Know your client's tax tolerance. I got some of them that says, "Well, just mess it. I don't want to pay anything until April 15th, as long as it's not penalty." Well, then great news. If they got a $15,000 tax bill, then we're just going to make sure they're penalty proof and we're going to hold that money till April
Mhm.
15th and they're going to mail a check on April 15th, right? There's just some clients that are like that. So know your clients, but you got to have a plan to pay those taxes.
Yeah, and you gotta have a plan to pay those taxes, and you've gotta have a plan for handling the tax preparer, even if the client is the tax preparer, especially
Yes.
if the client is the tax preparer. That's again where we go back to these one pagers, these illustrations that it's, hey, here's why we're paying today. We're paying today so we can. I like to use we pay the devil that we know, right? We want to get that
Mhm.
set aside. The tax diversification. Our friend Sten Morgan says, hey, do you want to pay $10,000 now, or do you want to wait until your IRA doubles and pay 20,000 later? And we can argue the nuances of that, but that's how clients think. And so we need to keep this as clear as we possibly can.
One of the things that I'm going to do too is when we go through and explain this with clients, the first thing that I'm going to do, and we talk about taxes, is I'm going to go over our tax buckets. Now, if you haven't seen our
Mhm.
tax buckets, we've done webinars and other things on it. It's basically a one pager, just because I write really big, where I draw four buckets and I explain the entire tax code as it pertains to our clients in four tax buckets. And I walk
Oh
through
my
how
god,
money
who
works.
was that? Sorry to interrupt you. Who was well, we won't name names. There's a tax expert in our industry, and I wanna say that he has, like, 8 tax buckets or, like, 12 or 15. It's
Yeah,
almost like an
yeah,
11 by 17 with 27
yeah.
different tax buckets. Like,
And they're
good luck
small
with that
tax
one. They're
buckets. Yeah.
small, yeah, they're sm and they're these obscure things like life insurance held inside of an islet. That's a bucket. Oh, okay. Thank you. Narrowed it way down. Sorry, so
Yeah,
you
narrowed
found
it
the
way
4
down.
buckets.
Nope, I do 4, right? On the top, it's ordinary income and tax deferred. Then underneath that is capital gains and tax free. That's it. And I get through our quick little tax presentation. The reason I love the buckets is it's simple.
Mhm.
Now, this is another good test. We talk about, what's a value add that clients like? Clients take this home with them,
Yes.
right? When I draw it out, they'll grab it and they'll take it home with them. So you know it's a solid win. So I'll draw out my tax buckets for them. I show them what it is. And what I like about this, Jarvis, is it talks about anytime we take money out of a tax deferred vehicle, IRA, TSP, 401k,
Mhm.
etc., it has a tax effect. And I'm training my clients from the beginning. I even tell them this, right? One of the reasons I'm showing this is I want you to understand anytime we do something with this money and it leaves this bucket, you owe taxes to the IRS, period. So that also subtly implies with the client, oh my gosh, before I do anything, I better call Micah to
Yes.
make sure this doesn't have a negative tax effect. So I'm going to draw out my tax buckets. And then after I draw out the tax buckets, Jarvis, I'm going to put the dollar amounts they have, the total, right? I'm not separating
Mhm.
out Bob,
Mhm.
Sue's, IRAs, TSPs, etc. I'm going to put the total they have in each one of the buckets. Now, in my clients, they're always top heavy with just ordinary income and tax deferred because they have TSPs, they have pensions, they have social securities. So then all of the sudden they're looking at their diversification plan and they know that says, well, there's four buckets, then mentally there should be 25% in each one, right? That's just where our mental math
Yep.
goes. It just is.
It is, yep.
Uh, yeah, and they're like, "Oh my gosh, I need to do something about this." Great news, we have a plan. So they can instantly see that having all of this in one area is not a great idea, and then we can talk about our Roth conversion strategy. So it's a simple picture diagram to explain it. Then I get the clients on board with it. Then after the
Mhm.
clients are on board with it, I'm reaching out to the COI and making sure I'm effectively communicating that with the COI before we execute.
Boy, Micah, there's so many angles to take this, right? This how this ties into your center of influence strategy. Right now, as you're
Yes.
listening to this in June or July, whenever this airs, this is a great time to reach out to all your accountants. Hey, I'd love to pay for an hour of your time to get a better understanding of how you advise our mutual clients on Roth conversions, right? And you can find out their tax tolerance. The other one that comes to mind for me right now, Micah, every time I hear Roth conversion right now, I think of our mastermind friend Michael Henley. He's at Brandywine Oak Wealth Management on the East Coast, and we were having our mastermind just this last week. And Michael says, you know what, for my super high income, high net worth clients, I recommend they convert every single IRA dollar into Roth. And all the rest of us in the room, we like stopped, like not every dollar. He says, yeah,
Every
$1 million,
Yeah.
$2 million, $5 million, whatever is converted all into Roths, pay the taxes on it. This, Micah, for me, speaks to the value of having masterminds to surround yourself with experts. Because then he walked through, he said, hey, for these clients that are always going to be in the top income tax rate their entire life, they're never going to go out of the top income tax rate. Why wouldn't they pay? What do they stand to lose by doing the Roth conversion, getting it all tax free, hedging against tax rate increases, additional creditor protection, additional estate tax exemption, quasi? And so it was a reminder to me, Mike, of the importance of surrounding yourself with other rock stars. I had never thought that one. I had always thought, let's use up the rest of this tax racket. I had never thought to going to a multi-million dollar client and saying, convert the whole thing.
I think it's a solid idea, something to think about. Now, but let's take this from an advisor perspective, right? If you're an advisor, you got 10, 15, 20 years left in the game at least being an
Yeah.
advisor. Okay, is your tax bracket going to go down? That means your practice is sucking if that happens, right? I mean, just to be
Something's wrong
clear,
here. Yeah.
right? So your tax bracket more than likely is going to continue to increase because your revenue is going to go up. Okay, well, this is a hard push for saying, are you converting your 401k Roth IRAs into
Mhm.
tax-free assets? And something you probably need to do.
Mike, I want to pivot if we can just a little bit for advisors who, again, are either very they're not experienced in tax, or they're in a kind of
Mm,
regulatory environment where do this is considered tax planning, and just compliance absolutely would not allow it. What thoughts do you have for that group that either doesn't know how to do any kind of tax planning, even stuff
sure.
that we would consider simple, or is just not allowed to do any tax planning?
All right, so step one, everybody should have the RTS. I'm actually holding up right now, the RTS tax guide on their desk. And the reason I'm
Yes,
holding it up is because I have it on my desk.
literally on your
Um,
desk. Yes.
literally on my desk. And it's in my conference rooms and it's at my office desk and it's everywhere. I told the team, hey, when there's updated one, this is the
Mhm.
locations I want it for the entire team because this is really, really handy. Number one, it gives me the current tax rates. Number two, which I love side by side, forgive me as I'm looking down at it,
Yes.
but side by side, it gives me the 2026 tax rates. Why are those important? Because that's where taxes are going. Yes, Congress can change the law. Spoiler alert, they can change it at any time they want,
Yeah.
right? But the law we have today says in 2026, your taxes will be higher than they are now. And in fact, this goes into a script of what I'm talking to clients about. It says, look, if you're in a 22% tax bracket today, in 3 years, 4 years, you're going to go to a you're going to go to a 25% tax bracket automatically just by the change of a tax year that's going to
Yep.
happen. Would you rather pay taxes today at a lower rate or tomorrow at a higher rate? And they're like, well, clearly today at a lower rate. Great, let's talk about a Roth conversion. So, Jarvis, I don't know where the compliance line ends with some of
Mhm.
these big institutions. For me, that doesn't get too much into tax planning.
Yep.
That's just general concepts of things we could do. Then the other thing that I don't think gets too much into tax planning personally, but is the Medicare, right?
Mhm.
When they are 65, what's their IRMA going to be? When they're 72, what's their IRMA going to be? Why is 72 important? Because we have full Social Security kicked in and RMDs are now into effect. Now that we have both of those that are coming in, how is that affecting our current income that we're seeing? So those are things for the IRMA side that I would definitely be looking at and say, how do we get ahead of this? I would just say this is retirement income planning. This isn't tax
Mhm.
planning because I got to
Yes.
pay for this expense. It went from $150 a month to $300 a month at 72 because the stuff kicked in. This is an expense I'm managing. This isn't taxes.
Now, Mike, I would add for our advisors that are like, wait, what is IRMA, and what do you mean about this tax rates, and what do you mean about the 2026 tax law increases? All these different
Yeah,
things. This is where, and our good friend Benjamin Brandt, who's actually going to be with us on December 8th at XYPN for our pre-conference. Five-star tip there, sign up for that. He said, hey, I don't want to become a tax expert. I don't want to have to master IRMA. He partnered with Retirement Tax Services to do this tax planning
perfect.
for his clients because he said, great, I know it's important. I don't want to spend the next 10 years to become an expert like Micah. I want to just have someone that's an expert. Maybe you can find that expert in your local area. I've not had a lot of success with that myself. Retirement Tax Services with Steven, the CPA there. Great resource if you see, you're like, "Ah, I see the value of tax planning. I just don't see the path to become an expert myself." Find an expert. There's no shame. No client,
Yes.
Micah, curious your experience. No client has ever told me, "Matthew, you're such a bum that you brought in an estate planning attorney. Why didn't you write these documents yourself?" It's just never happened. We all, because we're used to that, right? You go to your doctor and they
Yes.
say what you need. You need an oncologist because you have cancer. No one's angry at their doctor because, except for like the seventh referral, then you get angry. But you get my point.
Right. Yeah, exactly right. So these are the things that, and actually, Jar's quite the opposite. When I refer out to a good estate planning attorney, et cetera, they say, Micah,
Yeah.
thank you so much for this introduction. I really
Mhm.
appreciate this and being able to work through this because we were still the answer to their question. They were one phone call away and we got them in touch with whom they needed to help. Now, that's a CPA, that's an estate planning attorney, that's anything in our realm that's going to be there.
Especially when you coordinate it. Where it goes bad, and this is entire episodes, we've done entire webinars that are inside the Backstage Pass on this. Where it goes wrong is when you say, "Here's a number, give them a call." That doesn't
Yes.
work. When you say, "Let me schedule an appointment together, let me work with them, let me coordinate this together," then, it's returns in spades.
And that's a huge five-star tip right there, right? So I always schedule appointments with my COIs and my
Mhm.
clients together. And if for the some reason, if I cannot make that appointment, I will do a bomb and I will send it out in advance, outlining the expectations to the
Yeah.
COI and to the client. Hey, this is the client situation. This is what we've talked about. This is what I'm thinking about recommending. I'd love your thoughts on A, B, and C. This is what we'd like this outcome of the meeting to be, right? And I go through all of that and I send it because I want to make sure it's a five-star event for my client and for that COI.
Oh, I love that. I love that. Mike, I think especially right now, of course, we record these episodes a few weeks in advance. So maybe the market's fully recovered by the time this airs. When the markets are down, it's an especially good time to talk Roth conversions.
Yes.
And I would always, I know you and I share this soapbox, I would always, 99 times out of 100, rather have the conversation about let's do a Roth conversion now so that when the market goes up, that growth is tax free, than the alternative conversation that every other advisor seems to be having, which is let's harvest our losses. Let's really lock those losses in. Like, you don't even know how much money we've lost. We can lock all that in, and
Oh, we can lock it in.
somehow it's free. I guess I don't know.
Well, yeah, the first $3,000 I get a write off into perpetuity on my tax return. This is amazing.
Like a
Yeah.
funny story on that. Alex, our junior advisor, great advisor, great advisor. He says to me last week. He says, "Jarvis, what if you had to make the case for loss harvesting? How would you do it?" I said, "I can't, man. He's like, "What if you had to? Like, gun to your head, you have to make the case for loss harvesting. Pull the trigger, man. I'm not making a case for lost harvesting. I think it's a bad idea in all but the rarest of occasions."
Yeah, so this is my only unicorn, right? Because we used it on a client this year for lost this last year for lost harvesting, and we saved him a crap ton of money in taxes. Well, they had a highly appreciated, stocks,
Uh-huh.
etc., and they had a land that they had lost a ton of money on, but I don't know how because real estate only goes up in value, so that's weird. So they lost money on land.
Weird.
Anyways, so it was totally weird. So
Bermuda
they
Triangle.
sold.
Yeah.
They sold the land. They had like $250,000 in capital losses, and I immediately triggered some huge capital gains so we could get a ton of money out tax free, right? So now that was not me encouraging tax loss harvesting, though. This was, it happened to be the client's wish to sell the land. And now I have this $250,000 capital loss. What do I do with it? I want to use as much of that as I possibly can with my current tax law. I don't want to spend that sucker for the next 15 years and hope I use it and they don't get away with that law. No, I wanted to use up as much of it as I possibly can and take that money out. So that could be a unicorn. Again, I'm not going out and suggesting tax loss harvesting.
Now, Micah, what we've done in our office with the market down, we had Alex go through contact any clients. We have clients that we do Roth conversions every year, using up the rest of their tax bracket. So he contacted all those clients and said, normally we do this in November towards the end of the year because the market's down is a great opportunity. Let's do half of it now. Not let's do
Yes.
4,212. Let's just do half. We were going to do about 20. Let's do 10 now. In the fall, when we meet during surge, we will do the remainder or look at doing the remainder. So it can be really easy. Again, it's got to just be these one liners. It can't be some insane complicated thing.
Yeah, that's what you gotta do. Again, you gotta communicate with the client with a range. You gotta have a
Mhm,
plan for how you're going to pay the taxes,
mhm.
right? And please understand if they're under 59 and a half, then you can't use IRA money to pay that
Yeah,
taxes. So what's your plan for that to make
yeah,
sure that the tax bill is going to be covered as we go through this? Those are your big things. And then communicate it with their COI. Now, if they're their own tax preparer, great. Then make sure you communicate how this is going to
yeah.
show up on their tax return. You're going to get an additional 1099-R that you need to report. Great news. In January, we're going to send you a reminder about this. That's our 1099 letter, right? These are things that we definitely want to go through. Yeah, we're going through that right now with a lot of our clients, encouraging them to do Roth conversions. Decent amount of them, we're just doing the whole conversion now.
Yeah,
You know,
yeah.
50-50 in my opinion on what's going to happen. And if you are looking for a way to explain this, again, our webinar that we've done on the tax buckets, I talk about in 2008 when the accounts went down, how many people did Roth conversions. I say this in seminars, I say this in webinar presentations, client facing, when I draw out my tax buckets for them, because when I look backwards, they can easily see that this was a great idea. Hey, in March of 2020, when the markets dropped 30%, did you do a Roth conversion? Oh my gosh, that would have been great because the markets recovered, right? When I look in history, it's super easy to see the markets recovered. When I do it now, holy crap, the market's down. It's never going to recover, right? That's the emotional thing. So I'm always, Jarvis, going back to a historical example of why it made sense then to do a Roth conversion. Then I bring it to today. Now, this is for a new person that's never done
Yes.
Roth conversions for, right? Then I bring it to today. They're like, now I see it makes a little bit more sense. It takes away a lot of that emotional fear.
Boy, man, there's so many directions. You remember those books when we were kids? It was like the Choose Your Own Adventure, and it'd like jump to page 23.
Totally.
I feel like that's our podcast because right now I'm thinking about how you didn't tell the client that the market was at the bottom. The market's at the bottom. We have to convert. The market's at a discount. Now is a pretty darn good time to do the conversion. I'm never forecasting.
Yep.
I'm going to say, hey, eventually the markets will come back up, and when it does, it's tax free. I'm not saying it's going to be next month, it's next year, none of those things. All right,
And
go
if it
ahead,
goes
Micah.
down again, if it goes down again, the clients will say, "Well, what happens to the market?" Well, I don't really get this question from clients, but it came up on the
Yeah,
webinar. It says, "Well, what if the market continues to go down?" Good news, I might do another Roth conversion,
yeah, yeah.
right? I can't control it. I'm going to focus on things I can control. I cannot control the stock market. If you can, give me a call. Let's chit chat. But short of that, I want to focus on things I can control, and I can empower my clients in how they can control things and make decisions.
Boy, I love it. I love it. Speaking of things that you can control, this podcast is all about taking action. So, as much fun as it is to listen to Micah and I banter back and forth about our beliefs on Roth conversions, let's get started on some action items. Action item number one, visit theperfectra.com or XYPN Live to get signed up for the Perfect RA Panel of Success October 8th in Denver. Micah, myself, Ben Brandt, Stephen Jarvis, we're going to be talking about how we dramatically increase the success of our practice, the value that we delivered, while most importantly, being able to work less. So that is October 8th in Denver. And then, of course, Micah, we have another Invictus mastermind that will be the first
That's
week of
right.
December. I believe December 1st and 2nd. So get that on your calendar if you're an Invictus member.
Yeah, that was a ton of fun. A huge success of this last one we just
Yes.
wrapped up a couple weeks ago. And everyone that comes just says it literally transforms their practice. So really excited to do another one. We're also getting our May dates for 2023 in place. All right. Another action item is make a list of all the clients that you want to do a Roth conversion for and look at accelerating that. Pro tip, you should have had this. And if you don't have it yet, this is how you're going to do it next time. In your surge meetings, when you're meeting with clients, this is when I'm flagging them for a potential Roth conversion. Now, when I'm flagging them for it, it goes into a process, right? So all of our clients are going to have a Roth conversion process. It made sense for them or it didn't, but I want to make sure that we looked at it for every single client. So we trigger a process and during surge for people that are doing or looking at doing Roth conversions. Now I have a list, right? Now I could have said, hey, we looked at the Roth conversion for Bob and Sue. It did not make sense. Well, then perfect. It's marked in the system. It didn't make sense. I looked at one for Jane and Jeff, and it does make sense for them. I want to
Mhm.
look at it year end. Perfect. Now it's flagged as a pending Roth conversion. Now I can pull that list, and now I know whom I need to talk to. And I even said my range. So again, I'm doing all of my work in that surge meeting. So it makes this. I'm just going off on a tangent.
Yeah,
Sorry
yeah.
for the stars, but I'm doing
Love
all of
it.
this work in my surge meeting because it makes everything else so easy. I don't need to go and recalculate how much of a Roth conversion do I need to do. When I was reviewing their taxes, I came up with the answer right then and I logged it in the CRM. And so now I get to just go pull the list and say, great, I said it was a $20,000 to $30,000. There's no reason for me to redo that math, right?
Mhm.
If I was right then, I'm still right today. I'm going to move forward with that number.
Well, Micah, you mentioned if you're going to calculate the number, record it so you don't have to do it again. Same is true if you said, "Hey, I'm not going to do it." If your future
Yes.
self will trust your current self that no means no, then that's fine. That's all the answer you need. If you know that your future self will say, "Was Jarvis in Q1? Was he right about that?" If I'm worried, I'm going to doubt that. I'm going to say, "Hey, we decided not to do a Roth conversion because one, two, three." That way, again, I'm trying to save myself the time of, well, let me pull the tax return up again. Let me look through all the notes. Let me look through all the meeting notes. Let me look at the emails with the CPA. I want to eliminate those steps. If I have to touch something, I never want to touch it again.
This is why I dictate notes afterwards, right? And my dictation is like 1 to 2 pages. And I want to document those decisions because if I want to pull something back up, I need to be able to quickly look at one note from that meeting and have all of my answers, not redo it. So it's it turned into a long
No,
action
no,
item. It's
it's
pretty
okay.
short,
A
right?
little bit
Make the
short
list of
term.
the clients that you need to do a Roth conversion and contact them about it.
Well, and speaking of that list, you need to mention Roth conversions to every client every year. It can be a passing
Agreed.
one line, Mr. or Mrs. Client, like last year. Again, it doesn't make sense for you to do Roth conversions this year. I'll let you know if it changes. On to the next thing. Every single client every year, dishwasher rule needs to know that you intentionally decided to do or not to do a Roth conversion.
Boy, who knew we talked about Roth conversions for like 30 minutes and all we got into was just the barely the
Yes,
surface.
stop.
There's so many other things we could talk about on this, but it's all about taking action. Make sure you do that. Give us 5-star on the pod. And until next time, happy planning.
Happy planning.